Hey traders, Michael or 𝐿𝐼𝐴 here. You're here for another episode of Common Sense Market Analysis. Today is Hump Day, November 19th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, first things first, we're up 0.39%, around $2.55. Let's jump over to an hourly time frame just so we could break down what happened today in the intraday activity. So first things first, to the right of this vertical line is today's activity. So right here is the first candle of the day. We have our longer term pivot number at 660. And we'll get into that a little bit more as we move on. But just a quick mention, we are still closing candles above it. And take a look at what happened the first candle of the day. The exact low was 660.11. So we came up 11 cents short of hitting that pivot number. We did reach it towards the end of the day, a little spike through, even closed candles right here, but we always found ourselves staying above the pivot for the most part. And this morning we had a little bit of a fake out situation. And honestly, I wouldn't really call it a fake out. What I would really call it is finishing some unfinished business that was left over towards the upside. We could get rid of this line, we don't need this anymore. Let's draw a new line right at this gap. That comes in at 665.69. As you can see, yesterday on Tuesday, we came up just shy of filling that gap. Made a high of 665.12, near a big fat round number. We'll give that a funny how that works. And then today comes around, and then where did we go straight to? That gap at 665.69. That was some unfinished business. And also from that move, we can see that the market is still respecting this trend line, still utilizing it as overhead resistance. As long as we're staying below that trend line and continuing to find resistance off of it, then I don't see why price can't go back down towards the pivot number at 660. Okay, you could obviously tell that that number is important. We're spiking through it here and there. Right here, we pretty much nailed it on the dot, spiked it a little over here, but the market doesn't seem to want to give up that pivot so easily. Now, tomorrow can be totally different. We could clean this up a little bit. Actually, we could just remove everything for now. So going back over to the daily chart, obviously we can see that the trend has shifted. In the shorter term perspective, we are in a downtrend right now. And the reason why I say shorter term is because on the weekly chart, the bigger picture perspective, we're still above all the moving averages. All this really is coming back to retest home base after being extended from it. We are very, very close to finally being able to touch it. And going back over to the hourly chart, all we're really doing right now for the last 2 days or so is eating some time off the clock, recocking the gun, resetting the energy for another move. And at the same time as we eat time off the clock, in doing so, we're letting the 20 period moving average creep up to price. And I know I'm jumping around from time frame to time frame, but this is what you have to do to get a better perspective of everything that's going on within the market. You can't just be looking at one time frame. You gotta look at all of them. What's happening on a 15-minute chart might not be the same thing on a 2-hour chart. Speaking of a 2-hour chart, here's what I see. I see a big move down and then some consolidation, eating time off the clock, building energy for another move. Generally speaking, another move down. This is a bearish flaggish pattern. And it's totally normal that we're eating time off the clock. It's normal garden variety behavior. And this candle right here that represents a tail candle, all it really was a move to go finish the unfinished business at this gap right here. So we completed what we needed to complete towards the upside, and now Mrs. Market has an opportunity to release some of that built up energy for possibly another retest of the pivot and even lower. We still have that 20 period moving average on the weekly chart that needs to be touched. And as of right now, we're coming up short, so honestly we can constitute that as a first time best time situation. So I wouldn't be totally surprised tomorrow, Friday, that we come touch the 20 period moving average and even possibly a spike through it. I gave you guys a number that you should have already written down on a sticky note, and that happens to be at 647.25. Also, there is another number, and it's kind of a give or take number, but we'll call it 650, a big fat round number, and it also is a spike of the 100 period moving average. So right here, you already established a zone of support, and it should give you a reaction at least from an intraday perspective. We're a little bit far away from it right now, not really something to worry about, but as always, anything is possible within the market. And of course, we're gonna have the numbers ready for Inside the Numbers and live room members. One other thing that I just wanna quickly touch upon is this breakup candle low. We've been talking about it for the last few days, and this number can honestly be utilized as a pivot-ish number. Just by the looks of it, you can obviously tell that that area is important. Coming into that low towards the downside, we spiked it a little but did find some short-term support off of it, and then we gapped lower the next day, yesterday on Turnaround Tuesday, and we're continuing to utilize it as overhead resistance, back up towards the upside, and still closing candles below it. So that gives me even more reason to believe as we continue to stay below and close candles below, along with the unfinished business that we just completed, and Mrs. Market is going to want to make her way back towards that longer term pivot number at 660 and see if we could possibly get below it. You got 1, 2, 3 breakup candles in the vicinity of the pivot, and the low of these breakup candles is going to be some short-term support, so the market isn't going to give up that pivot so easily just yet, as you can see in the past few days. But as always, anything can happen within the market. If we start to close candles below on larger time frames such as the hourly, 2-hour, 4-hour, and even daily chart, we got to see where the day closes tomorrow, and when we come closer to the end of the week, if that is the case, then we could expect another move down, taking care of some numbers down below, and most importantly, that 20-period weekly moving average, home base. Let's go ahead and take a look at inside the numbers, starting with the 0 dark 30 notes. This is the morning game plan that's laid out to members well before the opening bell. Today was an okay day for the live room and inside the numbers. We did manage to pull off an early morning trade at the pivot number. We'll get into that in a second. But then also we did have a couple losers, as very early on in the morning when we went to go ahead and fill that unfinished business, that gap up above, she was blowing by some of our overhead resistance numbers up above. You're not going to win every single trade. Losses are a part of the game, but it's important to me to be transparent with you guys. So let's go break this down, see what trades we had on the board, where we went wrong, and see if we could learn from our mistakes. So let's go over the 0 dark 30 notes. We got the morning pivot at 662.40, scrolling up a bit at 925. We had an area of support that we were looking at very early on in the morning. Didn't quite get there, came up short, so we don't need to worry about that right now, but we did come back into that area later on. But take a look at this. If we make our way back towards the pivot at 662.40 towards 663.15, that can be some initial overhead resistance. So to the right of the vertical line is today's activity. We're on a 1-minute time frame because this move happened pretty fast. We could zoom in a little right here. The green line represents the morning pivot. The high right here is exactly 662.39, 1 penny short from the pivot number. But we can't split hairs over pennies. We went into the pivot, immediately found some overhead resistance, and came right back down. Made a low of 661.48. So gave you the bare minimum base hit and a little extra juice. And we don't let the remaining portion go bad on us. And then what about the back end number at 663.13? This is actually supposed to say 15, but anyway, we came into that level, didn't really have a reaction coming into it towards the upside, but here's the thing, and this is where you can tell where you went wrong in the trade. When we got above that level, started to come back down into that number towards the downside, and then as you can see right here, both times, we utilized it as support on the way back down, closing candles above it. That is bullish behavior, and essentially she was setting up for another move higher. So when you see the more time that we spend above an overhead resistance number, utilizing it as support on the way back down, and in addition closing candles above, that should be a very clear sign that the trade is no good, and you should probably cut and run. So that was trader's choice. This was the back end of the resistance zone. Going back over to the notes, we can see 9:37 showtime, finally reached that pivot number, looking for a base hit, and then literally the minute after, she gave you the base hit. Don't let the remaining portion go bad on you. And then scrolling up at 9:42, the back end number of that zone at 663.15 can be some overhead resistance. And then right here, I said closing candles below it is very important. The next target towards the downside would be at the pivot. But that's if we closed candles below it. Obviously, looking back at it now, that wasn't the case. Right here, I said the longer we stay above that 663.15 number, the more of a chance she can go towards the next number in the sequence at 664.10. And again, right here, 9:51. These are real-time updates. Still working on that 663.15 number, but notice how we're utilizing it as support on the way back down. That is a pretty big tell. And then obviously we got to the next target. Not every single one of these numbers is a short or trade on the board. Sometimes they're just targets that you need to be aware about. So we went up to the 664.10, started to push higher, and really the main destination that we were talking about very early on in the morning was at 665.75. That was this gap right here, the unfinished business. So right here was the gap. We'll go ahead and make this blue. As you can see, we spiked right on through, but that was the main destination. And also, here's the thing that I want to show you. So in the notes, I mentioned that we had another number. The exact number happens to be 66845. And here's the thing, just from the look of this morning, this thing is on an absolute tear. Looked like she just wanted to go up and up and up without taking any breathers. But as we know, nothing moves in a linear line. Whether she wanted to pull back, which is exactly what the market did, or if they want to eat time off the clock, building energy for another move. But one thing that we can use to our advantage is looking for sign and or signals of a trend change. Doesn't always have to apply on the larger time frames. Obviously, the larger time frames are going to be more dominant compared to the smaller ones, but what do we always say? All charts act and react the same way. So right in this area, we had a tail candle. The next candle right after happened to be a doji candle. This was in an on-time situation, and it also happened to be the midpoint between these two numbers. Tail candles and doji candles are sign and signals of a trend change. What about going over to a 30-minute chart? We can see that's a pretty decent sized tail candle. So you could have used these things to your advantage and spot an intraday trend change. These are all things that are talked about in the MSF Masterclass. Speaking of the MSF Masterclass, here's a little sneak peek for you guys. We have a Black Friday special for this course. $750 off. And there's only a limited supply, so you better get on your horses. This is the course that David Frost created, literally going over everything that you need to know about the market. His entire 30 years of market experience. He left it all on the table. It's everything that he ever knew about the market, everything that we talk about every single day. In addition to this special deal, you also get the magic calculator for life. That's almost $1,500 of value itself. And scrolling down, you can see some of the things that are talked about within the course, the basic foundation of technical analysis, the root of all numbers, how we come out with our numbers. You got morning gaps. This is an extension to the lazy gap trader with things that have never been talked about before. You got the psych ward. This is trading psychology. Personally, my favorite section. Pre-market routine. You got cycles. You got all about trading. This is mainly focusing on executions, stop loss, entries, pretty much everything that you need to know. And obviously, you don't need to take my word for it. You can take a look at some of our members who have taken this course, and it's changed their trading forever. This is only a little sneak peek of our Black Friday special that we're coming out with. This is only the tip of the iceberg. We got some other cool stuff coming, so stay tuned. But we'll call this a little early access. The link will be in the description below. And then just wrapping up inside the numbers and the intraday, we had a support zone down below at 659.75 to 658.90. We did find support right at the back end number, pretty much nailing it right on the dot. And then where did she go right back up to? None other than the morning pivot. Came back down, utilized the first number as support, and then went right back up. You could pause the video, read the notes, and go back to the chart to double check the work. Everything's in here for you. The morning game plan, the intraday updates, the afternoon write-up. Not to mention you also have stocks on the move. Today we had two. Unfortunately, they did not hit their entry targets, but that's okay. And then as a little cherry on the top, we also have support and resistance numbers for 13 different markets. Everything that you need to be a successful and profitable trader. What's going on over in Camp IWM, my number one favorite market leading indicator? We're pretty much flat today, eating some time off the clock. We're down 0.02%, pretty much a rounding error. Still closing candles below that 100 period moving average. That's 1, 2, 3 days of closing candles below. And just looking at this in a technical analysis perspective, all we really did today was run a test of the 100 period moving average and climbing this breakdown candle near the vicinity of the high. That is overhead resistance, and we came back down. We do have a support zone on the board that's at 227.18 to 225.97. The front end number happens to be this breakup candle low. And then down below you have this gap, some unfinished business. Should be some support at least from an intraday perspective. And very quickly going over to the weekly chart, we can see that we've already reached home base and already spiking through it a little. Can that be an early indication that the spiders need to do the same exact thing? This is my number one favorite market leading indicator, and the spiders are very, very close to heading to home base. This weekly close is going to be very important for Camp IWM, as right now we're currently trading below the 20 period moving average. Markets love to come back to areas in which they were previously eating time off the clock. Zooming out a bit, we can see right here, eating time off the clock. Zooming out a little bit more, near the same vicinity, once again eating time off the clock. So that area in itself is magnetic to the market. We see it all the time. Markets love to come back to these areas. Again, that's all taught within the MSF Masterclass. What about my second favorite market leading indicator? The transportation department. We're down 0.28%, still just playing around with these moving averages, the 20, the 50, and the 100. But what I see is that we're still utilizing that trend line as overhead resistance, not able to push on through and close candles above. With that said, the more time we spend below that trend line, we've already spent 1, 2, 3 days below, the more of a chance she can go back down to that pivot number. And we already came up a little bit short yesterday. So that is a first time, best time situation, and we could easily go for a little spike through. We have some unfinished business right here at this gap at 15,454. That's in the vicinity of a big fat round number at 15,500. As you can see, we found overhead resistance at a big fat round number at 16,500. So this could be a little bit of symmetry playing out. 16,500 up here, 15,500 down here. Definitely keep an eye out for the transportation department and continue to see how we treat that trend line and, most importantly, that pivot number. What's going on with the Q people? We're up 0.60%, ran a test of the 50-period moving average, came up a little bit short, but we did complete that unfinished business, which was this gap right here. But what's interesting and a little bit different from the spiders, in which we're pretty much hanging right around this breakup candle low. As of right now, closing candles above it, but really, we've just been playing back and forth with that number. With the spiders, we've been utilizing it as overhead resistance, not really able to close candles above it. Not really going to make a federal case out of it. It's just a little puzzle piece information that we have on the board, but we can certainly use that number as a pivot-ish number. The more time we spend below that number and closing candles below, the more of a chance she wants to go down for a leg lower. Very, very close to home base, just like the spiders. Coming up a bit short of it, we could still eat a little bit more time off the clock, wait for this to creep on up, or we can just come straight down and even spike through it by a little. At least in the short term, the trend has changed. We are receiving a pullback, but in the bigger picture perspective, and just jumping around real quick, this is just a little bit of a pullback still in an uptrend above all the moving averages, therefore the trend is your friend. What about XLF, the financials? We're up 0.37% today, still continuing to find some support at the last line of defense, the 200-period moving average. That is normal behavior, just coming straight into it. That is going to act as some short-term support. Right now, we're kind of just eating time off the clock at this area, but if we continue to close candles above and stay above, then she has the opportunity to go ahead and run this most recent breakdown candle high. That happens to coincide with a big fat semi-round number at 5250, along with the 20-period moving average. That is the next destination towards the upside, but if we continue to just stall out at the 200-period moving average and eventually close candles below, then the next destination is going to be this unfilled gap right here at 5082. That's some unfinished business towards the downside and the next most recent target. Going over to a weekly chart, that number also coincides with the 50-period moving average. We already came up a little bit short of it, but that just helps add to the full stack. And then also you have this big time breakup candle low at 49.84, very close to another big fat round number at 50. But take a look at this. Big move down, eating time off the clock around the 20-period moving average, and then continuing the move down. Right here in this zone can be some support, at least from an intraday perspective. Is XLF going to give up that 50-period moving average so easily? Well, we don't exactly know the answer to that, but we do have some support numbers coinciding with a few other things that put the odds in our favor. When XLF gives up the 50-period weekly moving average, that's when people start to get a little bit nervous. So it will be interesting to see if they just want to give up that moving average so easily. Last but not least, we got SMH shaking my head, the semiconductors. Smash mouth. We're up 1.85% today. We did manage to fight back towards the 50-period moving average and close candles above it. We did complete some unfinished business towards the upside. That was this gap right here at 340.30. We do have some more unfinished business towards the upside, near or around the 20-period moving average. This is kind of far away. It's at 355.53. but just always something to keep in the back of our minds. And then as long as we keep respecting this trend line, utilizing it as overhead resistance, we could keep heading lower. But then going over to the weekly chart, we can see that in the bigger picture scheme of things, we're still above all the moving averages. So the trend is your friend. Bigger picture, we're bullish. It's just a little pullback in an uptrend, or possibly a pullback towards the 20 period moving average, home base. Compared to where the spiders are with home base, the Qs, IWM, SMH is by far the furthest away from home base, the most extended. So again, we could eat a little bit of time off the clock, wait for the 20 period moving average to creep on up higher, or price can just come right down to it. One of those two things are going to happen, and I'm expecting to reach home base because of how long we've been extended from it. The last time we were below the 20 period moving average, this candle right here, that was 28 weeks ago, or 196 days. Those are both very important numbers. The last time we actually touched it was right here, February 24th. That was 39 weeks ago, 272 days. Again, important numbers. It's around that time where we start to come back and test home base. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information. Put it on a sticky note. We're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐼𝐞𝐴. Please don't forget to like, comment, subscribe on the video as it helps me and the channel out a lot. Friendly reminder that the link to the Masterclass Black Friday special will be in the description down below. So with that said, we're pulling the ripcord for today. We'll be back ready to go in uniform for Thursday's session, and of course the video later that night. I hope each and every one of you has a great rest of your day. Stay safe, and take care now, folks.